You just rode a brand new SUV off the lot. That new car smell, the shine, the title is fresh in your name. Now imagine this, Uncle Sam helping you pay for it. There's a brand new rule in the 2025 tax code that lets everyday car buyers write off up to $10,000 of loan interest every single year. No business tricks, no loopholes, just a clean, legitimate deduction available through 2028. So let's break down exactly how you can qualify and claim it. Starting January 1st, 2025, Congress quietly added a new above-the-line deduction for car loan interest, up to $10,000 per year. Above the line means you don't have to itemize. Whether you take the standard deduction or not, this directly lowers your taxable income. It's not a niche credit. It's not a business-only perk. It's a deduction available to anyone who buys a qualifying new vehicle. But you've got to follow specific rules to make it all count. This program only runs from 2025 to 2028. After that, it disappears unless lawmakers renew it. And with today's higher interest rates, the deduction can easily save you $2,000 or more a year if you're in the 22% tax bracket. Combine that with improving car supply, dealer incentives, and lenders eager to loan approvals of loans, and you've got one of the best windows in years to buy smart. But timing and details matter. Let's go step by step. First, the car must be brand new. You must be the first owner. Demo cars, courtesy vehicles, or anything previously titled don't qualify. Second, the car must be assembled in the US. Check the VIN number. If it starts with a 1, 4, or 5, you're good. If it starts with a J, a K, or a W, Japan, Korea, or Germany, it's out. Third, gross vehicle weight, right, must be under 14,000 pounds. That includes most cars, SUVs, and light trucks. And finally, leases don't qualify. You must finance the purchase and actually own the vehicle. Rule number 2, your financing must be a true purchase loan, not a lease or a balloon note. The lender must record a lien on the title. The loan must originate after December 31st, 2024. If you refinance later, that's fine. Just don't increase the balance. The deduction only applies to the original qualifying amount. And keep every statement showing your interest paid, because if the IRS ever asks you, you'll want a clean paper trail. Number 3, this deduction phases out higher incomes. Single filers starts phasing out at $100,000 MAGI. Married filing jointly starts at $200,000. You lose $200 of the deduction for every $1,000 above those thresholds. And by $150K for single and $250K for joint, it's gone. If your income fluctuates, plan your timing or lower your MAGI by increasing your 401 and your IRS contributions to stay eligible. And this is how the math works. Let's say that you buy a $42,000 SUV and finance about $38,000 of it because you put a deposit down, right? And at 7.9% for 60 months, you'll pay around $8,000, give or take, in interest over the life of the loan. Now, if you're under the income limit, $100,000 or $200,000, that entire $8,000 is deductible. At 22% tax rate, That's roughly around $1,760 back from the IRS. Over 5 years, that's close to $9,000 saved. And it effectively drops your interest rate from the 7.9% to 5%. And that's how this deduction turns financing into a smart financial move. Your step-by-step checklist. Let's give it to you. Here's your quick checklist. Follow this and you're good. Number 1, make sure you check the VIN number. Remember, those numbers must start with a 1, a 4, or a 5. Check the GVWR. The car must be under 14,000 pounds. Here's something that you need to do. At the dealership, negotiate the price first, then talk financing. Loans must originate in 2025 or later with a lien on the title. Make sure, I can't stress this, that you keep all the documentation, contract, the VIN, the photo, and the monthly statements. Run a tax preview every December to check your MAGI, your income over the year. Claim the deduction each year through 2028. So I'm going to go over some common mistakes to avoid so that way you can maximize and take advantage of this. Don't buy a demo or courtesy car. It's not new, so it won't work. Don't buy a foreign assembled model if you want the deduction. It has to be done here in the great US of A. Watch your income, right? Those of you who have bonuses, they can push you over the limit and you completely miss out. And ignore anyone telling you or saying that you need an LLC. This is for personal use only. This isn't free money. It's a tax break. If you don't need a new car, don't buy one just for the deduction. It makes no sense. But if you're already planning to upgrade, timing it during this 4-year window is a very smart move. The great thing is you can stack this deduction with dealer cash, loyalty rebates, or low interest promos, and your total cost drops even more. Keep a simple spreadsheet with the date, payments, interest, principal, and total interest. Your lender typically will send you a Form 1098 showing interest paid, but I recommend you track it yourself as well. When you file, enter your total interest on the Schedule 1, line 22, and include your VIN in the description. Make sure you keep all the records at least 3 years just in case the IRS asks for it. Remember, most states follow federal rules, so you'll likely get a double benefit. But states like California, which is where I'm from, New Jersey, and Hawaii may not do it. If you live there, you'll still get the federal savings. Just adjust your state withholdings a bit to stay balanced. This deduction isn't indexed for inflation. So the earlier you buy, the more valuable it is. Stay under the income cap. Buy a US assembled vehicle and keep your use 100% personal. If you use the car for Uber or DoorDash, you'll lose the personal deduction. Follow the checklist. Keep your paperwork tight and you can save thousands year after year. Before you sign that next car loan, make sure it qualifies and let Uncle Sam help you pay the interest. This is one of the most powerful personal tax breaks in years. Use it right and you'll turn your next car purchase into a smart financial win. If you have any questions, put it down in the comment section. I promise I'll answer them. And as I always state, you be great.